welcome to the December episode of Fintech Firebrand. I'm Virginie O'Shea, founder of Firebrand Research, and I'm here to chat to you about this month's FinReg and FinTech news. Now, on the FinReg front, we've had quite a lot of progress in various areas over the last month or so. Ahead of Christmas, we always get a deluge of proposals and consultations, so we're anticipating that towards the end of the month. We've had some significant news for anyone that's sort of post-trade capital markets focused. At the start of this month, the European Council finally approved the CSDR rewrite updates that were proposed by ESMA earlier in the year, then approved by the European Commission. So we can expect some regulatory technical standards to be issued at some point soon around that from ESMA. I'm not sure that will come before Christmas, but certainly we can expect that in the new year. And it also means that we'll have the final rules published in the official journal of the EU within the next month. So that should be more progress on CSDR that we were anticipating on that front. We've also seen a fair amount of discussion over the last few weeks on the ESG front. There's been some discussion in the US about whether the SEC will back off from some of the requirements of its own sustainability proposals. However, unfortunately, the next open meeting before the Christmas break that the SEC is conducting doesn't actually have anything to do with sustainability on the agenda as yet. So interesting to see that that's been postponed. That discussion, that open meeting will probably be in January rather than in December. But out in Asia, we did see some progress from the Monetary Authority of Singapore. They launched their own Asia taxonomy for sustainable finance, which actually sets out some detailed thresholds and criteria for defining green and transition activities across different sectors in the market. So that sets a benchmark for the region with regards to ESG FinReg. So certainly some big moves there. Interesting to note, in the UK this month, we've also seen some pushback from a parliamentary committee that is pushing against the concept of a retail central bank digital currency, or the digital pound, within the UK. Now, I know a lot of different central banks are working on CBDC pilots, some in cooperation with each other. I know that the Monetary Authority of Singapore, for example, is working with the Swiss and French regulators and central banks with regards to trying to develop some cross-border standards. But there does seem to be some consternation amongst politicians in the UK about the concept and whether it's desirable. So I expect that's going to be an issue in various markets. I know that there's certainly some of the European markets have already raised concerns about, particularly on the retail side, retail CBDC. There may be less pushback from the industry on the wholesale side, but certainly progress has been relatively slow overall with regards to establishing the fundamentals. I know that some of the banks do have quite an aggressive plan, particularly the Bank de France, with regards to the digital euro, looking to get movement over the next 3 years. But certainly we can expect a lot of debate on that front going forward. Another topic I frequently talk about is operational resilience, and we've certainly had a lot of progress this year on that front. This month, we also had the Financial Stability Board put out its own proposals, which are intended for large financial institutions and regulators themselves with regards to monitoring operational resilience, operational risk across the industry. And now its advice relates specifically to outsourcing and third-party assessment. So it could feed into every country's own version of DORA across different regions. And it's sort of sitting as a toolkit that it expects regulators to use, including a list of common terms and definitions around third-party risk assessment, so how you assess vendors, service providers out there, and some tools to help financial institutions understand critical dependencies, because there's a lot of language around critical, mission critical dependencies, that kind of thing, to see which third parties they need to focus on more. I would expect cloud providers are solidly in the frame there if you're hosting a lot of your mission critical systems up in the cloud, or are planning to over the next couple of years. And there's also a fair amount in there around how regulators should be supervising various financial institutions on this front, and how they should be carrying out their duties on that regard. And when it comes to actual operational resilience, we've actually seen some outages at market infrastructures over the last month and a half. LSEG has been beleaguered by a few. Its small cap trading, I think, was taken out a couple of days ago, a couple of times in the morning, with regards to a technical glitch that seems to have been affecting some of its systems. There's a lot of upgrades, updates to systems going on across the market infrastructure front. So this is why we have seen some of these outages. Although with DORA coming in, there's going to have to be much more transparency for mission critical providers and market infrastructures as well around the causes of these various outages. And also cybersecurity, as I mentioned last month, is top of mind for everybody in that regard with the ICBC hack. So certainly there's been a lot of discussion within the regulatory community over the last month on how to better address cyber risks going forward. And also something coming out of the regulatory quarters that is probably of relevance to all in fintech and financial institutions and beyond with regards to the challenges the industry is facing in Hong Kong. The Hong Kong Monetary Authority put out a paper this month looking at some of the challenges around talent and the talent gap that is currently facing both the regulator and the regulated within that market, looking at the contracting labour force, some of the skills gaps, particularly developing around next-gen technology, AI being one area, for example, and also some of the challenges with regards to evolving skill requirements related to those, but also evolving expectations for work from the labour force itself. So certainly interesting to see that regulators are facing the same problems that most of their regulated entities are facing as well, and some suggestions in there on how to make working conditions much more attractive to retain and attract new staff as well. So certainly that's something that I think everyone's going to be talking about into the new year. It's certainly been a topic this year on that front. Now, one of the less glamorous topics that I've been talking about over the last year is tax regulation. And certainly there is a lot of interesting stuff going on at the EU level with regards to trying to digitalise tax. And I've made reference to it before, but the FASTA regulation, or the FASTA directive, as it's known, actually, sorry, it's a directive rather than the regulation, so it will be nationally interpreted. But the FASTA directive is being discussed within the EU, the halls of the EU regulators as we speak. There's quite a lot of consternation and discussion, heated debate about the right direction of travel. Anything you touch when it comes to tax is always relatively contentious from a governmental point of view. Obviously, tax generates revenue for the country within the governmental area. So certainly, and there are very wide gaps between how tax or withholding tax is treated in each individual European market. So certainly, and obviously the way that those markets operate is very different. So certainly there's going to be a lot of debate on that topic, and I expect FASTA will be a big discussion point in the next year. In 2024, we'll see hopefully some progress on FASTA. We'll see an official draft of it coming out from these debates and discussions. We've seen, initial proposals, though they may undergo significant changes depending on who has the power at the EU level to get their way with regards to what the end regulation looks like. But certainly it would be a massive leap forwards for the industry to digitalise some of these processes. I think we have around about 450 plus forms, all paper-based, across the EU when it comes to reclaiming withholding tax, so for double taxation treaties. So certainly that is a lot of paper to take out of the industry and convert into a digital process, which could be much more efficient, much quicker to deliver returns or the tax reclaims for end investors, because at the moment a lot of money is being left on the table, and we're talking billions of euros. So per year, I think it's over 5 billion the European Commission is estimating is going to be brought back to the investor community. So that's significant when you look at pension funds and individual investors. So watch this space when it comes to tax. Even if it's a very dry topic, it's certainly something that does need to change on the asset servicing landscape. And for those monitoring new market entrants, Robinhood this month has declared its intentions to push again into the UK and the EU. 3 years ago, it tried the same move, but was at the time unsuccessful. Now it does seem to be heralding its wider, possibly more successful push. It's talking about bringing its retirement offering to the UK. It's also talking about its commission-free crypto trading to the EU, bringing its commission-free crypto trading into the EU markets in light of the markets in crypto assets regulation that's coming into force, MiCA. So it'll be interesting to see if they're successful this time. There are a lot of concerns, I think, from regulators about certain aspects of the business model. So I expect those will be well debated, well discussed by individual EU regulators, but certainly interesting to see another neo-broker on the scene coming over from across the pond. Some have been successful in gaining a foothold here. We have seen a spike in the number of neo-brokers across the EU over the last 5 years. ESMA's been benchmarking that, noted it in one of its trends, risks and vulnerabilities reports a couple of months ago. So certainly it's a space that they are keen to see more engagement in, certainly part of the Capital Markets Union to increase the amount of retail trading in the across the EU and within the UK. So certainly will be interesting to see if it has an impact on that as well. And for my final thoughts for the month, obviously it's the end of year. Everyone's looking at their predictions for the next year. I'm not going to do that in this particular instance. I would, draw your attention to the upcoming reports that Firebrand's going to be producing, looking at what to look out for in 2024 across the capital market spectrum. AI is not the headline item in this one. I think there's a lot of other things and developments that I've mentioned today that are possibly going to be bigger and more impactful than AI in the short term. Obviously, technology does play a role in reducing some of the inefficiencies in the markets, but so it on its own will not have that impact. But I would like to wish everybody a happy holiday season. Hopefully you'll get time to rest and relax over the Christmas period, and you'll be ready and ready to hit the ground running in January, given we'll have only a few short months at that point, 5 months until T+1 in the UK, in the US, and in the Canadian markets and Mexico as well. So certainly there's a lot of things to be preparing for. I know a lot of operations teams will have a busy start to the year as a result of these changes. So certainly I wish you a restful season.